look at my portfolio today. So I was making decent money throughout the day. I don't look at my portfolio all time around, but I was monitoring it like every 2-3 hours in between when um, I get any break from the work. So when I wrapped up my day, I was making like $100 or something today. But when I switched off, went back home, was busy with doing exercise and writing a few blogs. After that, I found, just to my shock now, that um, shares fell today, and there's no surprise that there was a news that there were few rockets fired at an Iraqi base that hosts American troops. So, as you know, markets, they doesn't like surprises, and this was like a surprise to them. And after market, they went down 400 points. All right, this is a good lesson to start with. I just wanted to show you that I am making like $100 in past 3 months, and overall I'm making some $30. That's not too much. So my investment strategy is growth dividend. So nowadays dividend investment strategy is very famous, but I'm also looking at growth related shares to buy growth related shares. So my strategy is growth dividend investment. For that, my top 5 picks for 2020 are, first of all, Amazon, which fell like 2% today after market, because in the daytime it was like $1,900, and now if you look at it, it's $1,862. So as you can see, I've just bought one share because this is an expensive share, and I am on the wait list to get the fractional share buying option in Robinhood. Currently it is not available to me. Yeah, so as you can see, I have only one share because it is very expensive, and I saved like for a month and then bought just one share, and its value is 1862. I'm making $122. Today I was close to $200 on this. This is a very good share with very good potential for growth, not just because of their e-commerce business, but their biggest business is AWS, which brings a lot of revenue to them. Although they have lost their deal for federal government to Microsoft, they still have a lot of big contracts. Like, for an example, Netflix hosts all their content on AWS, and you can imagine there is so many videos out there on Netflix, and all of them are hosted on AWS. So they are using, and they are paying Amazon. Like Netflix, there are a lot of other streaming platforms or other companies which are paying Amazon every month, every hour. So they are making a lot of money through that business, and it is going to grow a lot this year, and they are the market leader in that. Although they are facing tough competition from Microsoft and Google, but I think they are still going to be ahead because their product is superior than others as of now. Next stock that I want to show you is Microsoft. My day job is in a tech industry, so I monitor Microsoft very closely. Microsoft is a very good pick. You know them because of their software business, Windows, but they also are a big player in cloud nowadays, and their hardware business is growing now with their Surface lineup, as you have seen. So I would say they have a good potential. I bought 2 shares. I mean, it was an incremental, as my channel name is, incremental. So it was an incremental buying process. I did not buy both of the shares at one go. Let me show you the history. So I bought first share of Microsoft at 117, but I had to sell it because I was I sold both the shares because I needed some money in June, but I bought it again for 138, and then I bought it again for 156. So my average price is 147.38 currently for two shares, and I'm making 4%, 4.8% total returns, plus it gives you dividend. Next stock that I'm really impressed with is Vanguard High Dividend Yield ETF. I bought it for 85. Currently it is at 92. Even after today's plunge, it is still giving me 9% return as of now. And good thing about this is it pays you dividends. So if you can see it pays me dividend like every quarter. I'm going to buy more of these because this is like a safe bet, and their dividend yield percentage is 3.02, which is really good. My fourth share to buy is this Apple, and this is not the typical Apple that company, this is Apple Hospitality. They are into infrastructure, and if you want to know more, they are into hospitality industry, and they basically invest in the infrastructure side of the things, and they pay very hefty dividend, 7.5%. I have so far bought 40 shares of this company. My average price is 15.88, and I want to show you something here. So this company basically pays you 10 cents for each share that you hold for that month, for 1 month. So you get like 10 cents every month for the share that you hold. So basically I've made a lot of money here. Then I just had one share for a very long time, and then I bought more and more. Last month in December I was paid $2, and this month I'm going to be paid $4 because I own 40 shares of Apple. So if you calculate that, by end of this year, just from this Apple Hospitality, I would make $48. I know that doesn't sound much, but if you have more money and I'm going to add more shares of this, I'll be making consistent passive income out of it. And if you look at the dividend yield, which is like 7%, which is like 4 times of your best saving account rate of interest. So any day I would say I'm going to buy more of this share, because I truly believe that this is going to give me a long-term passive income. And this generally is a very solid company. They have very good potential, and they have very good assets, so that they're not gonna go down and make the value zero. Alright, the last company that I'm going to focus more in 2020 and buy a lot of shares is AT&T, for obvious reasons. They are in 2020, everyone is expecting to have 5G rolled out, and AT&T is going to be a very big player. And now with merger with T-Mobile, it's gonna be a good one. And look at this dividend yield, 5.35%, which is really good according to the industry standards. Let me show you the history. I held just one share for a very long time, and then I sold it, then I bought it again. So it paid me 51 cents sometime back in May, but I'll be getting paid a lot. I'll be getting paid more because I hold 3 shares now, and my strategy for 2020 is to buy in bulk AT&T because I see very good potential for growth as well as dividend. In the end, I would like to give a shout out to 3 channels that I follow closely for my financing habits and improving my financial health. One of them is Dave Ramsey. He is like the guru for most of the Americans for their financial health planning. Second one is Graham Stephens. If you don't know this YouTuber, he is a millennial, and he was also CNBC's millennial uh, series. He's a very he's he's a very fast growing YouTuber. Third YouTuber is Andre Jix, I guess. Jik, his name. I'll link his YouTube channel in the details section. He is also a very fast growing YouTuber. He basically makes video about his portfolio on Robinhood. His strategy is dividend investment, and he is making, he has made a lot of money out of his investment habits, and he has a portfolio of around 200,000 currently, which is really exciting to watch how his portfolio grew. I'll link their YouTube channels in the details section. If you get a chance, just go there, like their channel, subscribe to them, and also subscribe to my channel and like my videos for more future content. Thank you, and see you in the next video. Please let me know in the comment section about your thoughts about my strategy for building this portfolio, and if you want to share this video, please go ahead, share it with your friends. Let's build a portfolio together in 2020, and let's make some money. Thank you.